So in today's video, we're gonna be talking about the top 6 best stocks that you can invest in today and not worry about because they're gonna make you money. Look, if you're just getting into investing into the stock market and you came to the internet to look for more answers and now you ended up with more questions than you knew you could possibly have, then trust me, I get it. Welcome to the club. Investing can definitely feel quite overwhelming, especially if you don't have any background or you don't know where to look. Because every online forum, every website, and every YouTube channel will tell you something completely different. But it doesn't have to be that way. The same way you wouldn't go to your English teacher for your math homework or your old creepy fat uncle who smokes a pack of cigarettes a day for your dating advice, the same way consulting a sketchy online forum for your financial advice is probably not the best idea. So I'll give you a breakdown of what these stocks are, why I picked them, and some juicy details about them. And this is by no means going to be a super complicated research-based video. It's going to be relatively easy to follow along and simple and to the point. So with all that being said, let's get into it. So coming in at number 6 on our list is Amazon. Now, Amazon is an incredible company. When the Rona came around, it was wiping people's portfolios off the face of the universe. Believe it or not, Amazon actually had a spike in price. It makes you wonder if one of the world's worst pandemics couldn't bring the price down, then what will? It's safe to say that the company has quite literally changed our lives from 1994 when it started off selling books in Bezos' garage to now in 2023 where it's selling just about anything from toilet paper to candy to horse masks. This company is currently valued at $1.6 trillion and it's a classic case of too big to fail. This company has so much money and so many resources that it's becoming a monopoly over the online retail space at this point. And no matter what happens, whether an economic crisis comes about or another pandemic, it has tons of ammunition to deal with the issue. That being said, for the next 30 years, there seems to be a relatively bulletproof outlook for the company Amazon. And for that reason, you can rest assured knowing that your investment is safe within the company, not financial advice. Number 5 on our list is Tesla, which is a company that I overlooked purely for the fact that it was incredibly hyped up. Now, in the majority of cases when an investment is hyped up, the price of the actual asset is not congruent with the value that it provides. Generally, when an asset is very hyped, the price is extremely inflated, which is followed up by a sharp crash. But every now and then, a Tesla arises from the ashes. I should have never doubted you, Elon. Now, the interesting thing about Tesla that a lot of people miss out on is that it's not just exclusively a car company. It's also in the energy space as well as the technology sector. And is rated bullish for short, intermediate, and long-term investors. So now might be a good time to get in. And coming in at number 4, we have Google. This company is unreal. In 2015, in the second quarter, they had earnings of $17.7 billion. Now, just 6 years later in 2022, they recorded a second quarter earnings of $61.9 billion. And interestingly enough, this was a 62% increase from just last year or 2021 second quarter, when everyone's revenue was falling. Now, just for context, there are approximately 2 billion people using YouTube today, which is something like 26% of the world's population. So similar to Amazon, Google has a monopoly over the search engine business and arguably has the most consumer data out of any company in the entire world. And that's why they're regarded as some of the best marketers out there because they truly understand their consumer. They know things like your likes, your dislikes, your favorite place to eat, your marital status, you name it. And as creepy as it might sound, the currency in the 21st century is in fact data. And Google has a lot of it. Named after a fruit and coming in at number 3 is Apple, which also happens to be one of the most popular companies amongst millennials today. Apple is the most valuable company in the world and was the first ever company to reach a market valuation of $1 trillion. And just in the last 24 months alone, they've grown 27%, which is incredible for a company of that age and of that size. Now, they're one of the best growth stocks out there and have been paying dividends consistently for 8 years now and have earned themselves a dividend safety score of 99%. As well as a payout ratio for 16%. Now, just for context, anything below 60% is considered to be really good. Not to mention they have something like $200 billion cash on hand. Amazing. Now, the downside is that just like any other Apple product, the stock rarely comes on sale. And right now it's estimated to be a little bit above fair value. So if you were to buy it today, you wouldn't be getting the best deal, but for sure over the next 20 to 30 years, any price that you buy it at, you'd see a return. That being said, 10 out of 10 would buy the world's biggest fruit company. And number 2, we have Johnson & Johnson. J&J is a pharmaceutical company that's arguably one of the biggest in the healthcare sector. This company is an OG darling when it comes to the dividend investment community. And if you were to ask anybody who's heavily involved in dividends what their top 5 favorite companies are in terms of dividend payouts, J&J will definitely be on the list. One of the things that really interested me about this company is when I first heard that it was in the dividend aristocrat. And I was like, what is that? It's essentially a company that pays out dividends for 25 years consistently without missing a single payment. Believe it or not, J&J hasn't just done this for 25 years, but for 58 consecutive years. Now you can imagine all of the economic chaos that's gone down in the last 58 years. And through all the market volatility, this company was consistently able to provide dividends to its shareholders. As a passive investor, this is the best news that you can get, because once you're in retirement, you want to know that that company has your back. Not to mention that the company has a dividend safety score of 99% and a beta of 0.5, which means that the company is not incredibly volatile, so you won't get a heart attack by holding it. And that's why this is my favorite stock on the list. Well, maybe second to the next one. And coming in at number 1, and my favorite on this list, is the VOO index. Indexes are great because they automatically allocate your resources amongst different sectors and amongst different stocks. Now this is great for mitigating risk, and the reason for that is because if some catastrophic economic event were to take place and were to wipe even an entire sector off the map, the rest of your portfolio would be absolutely untouched. Now, if you had all of your eggs into one basket, then it wouldn't be too great for your portfolio. So because of the extra layer of security that it provides for me, I put it at number 1 on my list. I would be curious to see what your guys' favorites are in this video. Go ahead and drop it in the comments below. I'd love to read all of your responses. All that being said, I hope you guys had some great takeaways from the video, and thank you so much for watching. Don't forget to leave a like, and I'll see you guys next time.